This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashirdish. Thanks for joining us at XM.com. The panic that roiled bond markets last week continued to recede on Wednesday as central bankers from Europe, Australia, and elsewhere warned against sudden spikes in bond yields, which have had a rippling effect in equity and currency markets. Up until yesterday, one notable absence in this pushback had been from the U.S. Federal Reserve, with Chair Powell playing down the significance of the gyrations in Treasury yields. However, Fed Governor Lael Brainard may have just hinted that U.S. policymakers are not as relaxed about this spout of volatility as they've been indicating. Her comments were the first from a Fed official to suggest that the central bank would not be too happy to let long-term borrowing costs rise too quickly. Their views may have set the stage for Powell's next big speech on Thursday. As the Fed figures out a way to sound alarmed without being too panicky, other central banks have already jumped in with verbal interventions. The reassurance from major central banks that not only are they not about to pull the plug on the massive stimulus flooding the markets, but could increase their bond purchases, is buoying equities, with stocks in Asia and Europe rallying today. U.S. stock futures are also pointing to a strong open on Wall Street following a disappointing performance yesterday. Aside from the steadying on bond yields, expectations that the U.S. Senate is inching closer to finalizing President Biden's $1.9 trillion stimulus plan is also supporting sentiment. Amid the somewhat more cheerful mood, the safe haven yen and franc underperformed on Wednesday. However, the U.S. dollar was resisting steeper declines, eyeing fresh 6-month highs versus the yen as the 107 level moves within range, while the euro was struggling to make a decisive break above $1.21. The Australian dollar, along with its Kiwi and Loonie cousins, were also seeking to extend their rebound. But it was the pound that was in the lead today, as the British currency was desperately trying to climb back above $1.40. Sterling is being bolstered by expectations that the UK's Finance Minister Rishi Sunak will unveil a growth-focused budget later today aimed at reviving the virus-battered British economy. However, should Sunak's spending plans not go far enough, the pound could be in for another setback. This was today's Daily Market Comment. Thanks for joining us at XM.com.